31. Art Cashin joins us today, UBS Director of Floor Operations, who wrote a lot about the number going into it this morning, Art, and I wonder what you make of, with CPI, core running hot, and the stablecoin blow up, how impressed should the bulls be with themselves this morning?
Well, I think the stablecoin might be the more serious of the lot. I think what happened was the CPI number came out a little bit hotter than people had hoped for. And then I think after some initial pull down in the market, they began to realize, listen, we got what we expected. We didn't get what we hoped for, but we got what we expected. And now we'll have to look to tomorrow's inflation number and see where that is. But I think you very aptly bring up stablecoin, because I think by reflection, you recall we had a pretty ugly looking sell-off on Monday, and it looked like a liquidity squeeze, and a lot of us were trying to figure out where was the liquidity squeeze coming from. I guess maybe it was coming from currency. Little did I realize that it might be coming from cryptocurrency. So I think that's we have a new thing to look at here. You know, people were talking about the weakness in Bitcoin seemed to come with the weakness in the high cap techs. But I think traders are going to have to watch any sudden weakness in the cryptocurrencies will have people recoil and get very defensive in here. So we want to be careful. I think we want to watch tomorrow's number. The influence of the 10-year yield has become a good deal more elastic than it had been. If this were 2 or 3 days ago, the Dow would be up about 500 to 600 points based on where the yield is. So that's become more elastic. So I think you hit the nail on the head when you said, you know, the new surprise is in the cryptocurrency area.
Right. On China, if we were to get some of these lockdowns easing, in your view, Art, is that dovish because of better supply, or is it hawkish because of renewed demand?
Well, I think the initial reaction would be that it might be dovish in the sense that anything they can do to begin to unlock these chains. I think you're going to hear traders checking more and more about the shipping delays in the major ports. You know, that Shanghai shutdown seemed to lock down a lot of movement, and all of the transitory thinking, if you would, that came out of the Fed really had to do with the shipping logjam, and that's certainly something that frustrates the Fed, because as much of an influence as that is on inflation, it's something that interest rates can't change. So, you know, they've got to see that loosen up. So that'll be a clear picture. I think the initial reaction would be dovish, and then they'd reassess and see how much of a difference is it really making.
Art, I mean, we saw the S&P earlier this week dip below 4,000, actually close below 4,000. Since then, it hasn't really fallen meaningfully further. And in fact, today, right now, currently we're trading at 40.27. I realize the Nasdaq is technically in a bear market, but for someone who has seen so many trades and so many market cycles over so many decades, does this feel like a bear market and bear market moves to you? What would you liken it to?
Well, it does in a sense, because I agree with somebody who's been around almost as long as I have, Leon Cooperman, who said that there are some aspects here that don't quite feel like a bottom. It feels like we may have some more work to do on the downside. I think what happens, and what a great many young people don't realize, that the stock market is kind of like a living entity. It gets to levels and then it rechecks itself. You know, you get to a point, it's as if you were walking or running somewhere and suddenly you seem to be a little shorter of breath than you thought you would be, and that raises some concerns. So you go back, let me see if I can walk that block and a half again. So the market keeps testing and retesting itself. So I think if we dip, the next thing that the viewers should keep an eye on is on any weakness taking out yesterday's lows. So, you know, you go from a level, that becomes a kind of milestone in the back of your mind. So any pullback, I think, in fact, some of the bounce that we're feeling is they did break the previous day's lows in yesterday's action, but they did not go into any trapdoor selling, and that gives the market a kind of, yeah, I guess I made it past that. That's not too bad. I think I can do that again. So that's where we are today.
Although, Art, we talked a couple of days ago, and you expressed interest in seeing a 90% down day coupled with a big surge in the VIX. We didn't quite get there, but you're still hungry for that in terms of an open door back into the market?
Oh, yeah, I think that would be a true washout. And what happened, the selling was, it may have been 9-1, but the selling was ugly but not vicious. You know, it's vicious call when you look and it's almost disbelief, you know. I've been doing the greatest disbelief I can recall. It was in the crash of '87. You know, it became surrealistic. You were looking at the prices on your pad and said, that can't be right. I can't be there. So it becomes vicious when you're looking at it and say, my goodness, where are we going? How can this be happening? And I don't think we've reached that extreme. The other point was that the VIX popped, but it actually closed off its high of the day. So I would love to say, they don't often give you this guarantee, but if you get something like an ugly 9-1 and get a VIX up around 40, then I would say you can have my wallet. Here we go.
Art, appreciate that. Always good to talk to you. Art Cashin.